Hello traders and welcome to another video review. Today is Tuesday, January 18th, 2022. Let's take a look at the Forex calendar first. Bank of Japan interest rate announcement has been published deep in the night, but the actual interest rate has not been changed. Just as expected, Bank of Japan has left the interest rate at the level of minus 0.1%. Moreover, industrial production in Japan decreased from 7.2% to 7%, which was worse than expected, a reading of 7.2%. On a monthly basis. On yearly basis, it worsened even more to 5.1% versus the 5.4% expected. So we will definitely take a look at the US dollar to Japanese yen later on. During the London session, as you can see, we have already some data released. Climate count, change count rate, and average earnings index had been published at 8 o'clock from the UK, of course. And as you can see, mostly this data was then expected. Only the average earning index is in line with the expectations of 4.2%, which is even which is worse than last reading of 4.9%, which means the average earnings in UK are going lower. What's more, during the London session, ZEV Economic Sentiment Current Situation and Survey. Those data are all from the Germany and from the Eurozone, are scheduled for release 11 o'clock. As you can see, the economic sentiment in Germany is expected to improve from 29.9 points to 32.1 points. During the New York session, we have the New York Fed Empire State Manufacturing Index, Housing Market Index, and that's about it. Those data are not that much important for the market participants. And the Tuesday during the New York session looks very, very calm, unless something will trigger the greater volatility. So that's calendar for today. Looks like overnight we had the highlight of the day, and the London session will be much more busier than the New York session. So let's take a look at the Japanese yen first. The Japanese yen at the daily time frame chart has made very interesting bar here. It is a clear pin bar, and this pin bar is in form of a hammer. However, this candle body is a little bit small. Nevertheless, it means that the bulls are right now trying to move the prices higher after the breakout. As you can see, those last breakout towards 113.50 was false breakout, and if we try to put this trend line here, just like that, from that low here, because we have a high, we have a higher high, we have a higher high and higher lows as well. This might be a kind of a interesting trend line. The market is bounced. The market bounced from this trend line support. Right now, the local high was made at 115.7 pips. So the market is trying to bounce a little bit higher. Let's take a look how much we already retraced. As you can see, 50% of the last wave down had been retraced already, 114.95. The next target for bulls is seen at the level of 115.28. That's the 61% Fibonacci retracement. Let's leave it like that. And the next technical resistance is 115.53. Momentum has bounced back above the positive territory, above the neutral level. Right now it's just 52 points, but looking at this chart, I can say that this move up is backed by the increase in the momentum, so we should expect another rally in the US dollar to the Japanese yen soon. So if we are talking about the US dollar to Japanese yen, let's take a look at the US dollar index. The US dollar index on the daily time frame chart has bounced from the 61% of the Fibonacci retracement of the last wave up. This part of the chart, this part of the price action is clearly corrective. This part is clearly impulsive. So the uptrend is still intact, and it looks like despite the fact that we got back towards the channel, the main ascending channel, the momentum is still, I mean, the uptrend is still the same, but the momentum is a little bit lower than it used to be. However, after the bounce from 61%, all we need to see increase in the momentum is sustain and breakout above 95.50. Okay, so if we break above 95.50 and run towards 96 points, then this momentum might increase as well. If we put our trend line here, we can see that we are very, very close on the RSI to break above the trend line, break above the level of 50, and then enter the positive territory, which means this market will easily break above 95.50, and the US dollar will dominate the markets again, so it will be rising across the board. British pound. Data from the British pound are making our scenario works perfectly. We have a very interesting situation on the British pound right now, and what do we see here is like a pin bar candle. It looks like a shooting star. It looks very bearish for me for now, and as you can see, we got this scenario of possible test of the zone of 1.3505, 1.3568. This is the key zone here. That's the technical support right now, so I will change the color for green, and it looks like this will be the key technical support, 1.3515. so please keep an eye on this level. We should bounce from this zone, or at least from the level of 1.3515 and head higher towards the key zone. The next one is 1.3836, 1.3992. As you can see, I got my blue arrow pointing at this levels right now, so please keep an eye on the British pound because it looks like we are, of course, extremely overbought for now. However, this move here looks very promising for bulls, and if there will be enough momentum to keep this up move steady, then of course higher prices are possible, and from the level of 1.3836, the road towards 1.4 is very simple. There's plenty of room to grow higher. As you can see, that move up is very dynamic. It's very quick, and it might be a very promising move for the future days on the British pound. Last but not least, crude oil. Why we are talking about the crude oil? Because we are breaking higher again. This is now not ABC corrective movement. This is a classical impulsive wave. So we got the decline here. That's the wave 1, that's the wave 2. We are now developing wave 3. There's wave 4 and wave 5 waiting for us. So let me just show the wave. Right now we broke above the highs from the December last year, and as you can see, we are trending higher. Last high 85.74. It's typical for the wave 3 to extend the rally, so the commodities are bouncing back in a big style. As you can see, this is the long-term trend line. It was pierced here, but this piercing was not sustained. There is a big pin bar here, and then of course the trend reversed, and right now we are going higher. As you can see, my blue arrow is here, which means this is the key technical level for some reason, and the reason is this is the high from the October. So we are waiting for the end of the wave 3, pullback in wave 4, and then last push in wave 5. levels over $90 per barrel are possible on the crude oil. And last but not least, let's take a look classically on Bitcoin. What is Bitcoin doing? Well, not much. The Bitcoin is still trading out of the channel. So the last breakout out of the channel wasn't that that strong. The market is going back towards 41,000, and 45,429 is still the key short-term technical resistance. Momentum is still negative, and bears are in control of this market, so lower prices are expected. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.